And the key headline, as John underscores there, is a discussion of a stronger currency offsetting the reality of copper being very, very expensive. That's FX 101, but this is not a floating currency, is it?
No, it's not. These are very direct comments from the central bank in Beijing, Tom, and it does look like they are trying to manage expectations. I can tell you that manufacturers here are screaming out in terms of the input prices they are facing, especially in terms of the imported commodities. We've spoken to a lot of factories in recent weeks, and all of them make this point that they're struggling now given the cost base that they're facing. But clearly, the PBOC has felt the need to come out and offset any expectations out there that the exchange rate can necessarily be levered or pulled in the middle of all of this. And I should say, as John pointed out, they're also making clear it's also not about pulling it to the downside to help exports either.
I mean, and what's so important here, I was going back and forth by chance this morning with our Tanya Chen in Hong Kong, and 20 years ago, Ken Rogoff at the IMF was talking about this and the underlying theories of the late Rudiger Dornbusch. And the answer is you're floating or you're fixed. And then there's a PBOC with their own rule book. Do they actually control foreign exchange dynamics in China, or is a market intruded in to change that formula?
It's clearly a managed currency, Tom. It is a manipulated currency, but nonetheless, they have been allowing the market to have a greater say in recent years. This year, the yuan has been on a tear. In fact, it's at its strongest level now since 2016 when you look at it against a basket of trading partners. And that is certainly an obstacle for China's export story. And we know that exports have been a big part of the recovery story there, given the lagging consumption story. But China does control the currency. It controls it very tightly. But I think what they're doing tonight is trying to send this message that they are responsible global players, that they are not going to step into this commodity rally by using the exchange rate as a weapon or a tool in the middle of all of this.
And there is a question here as the Yuan does strengthen. It invites more foreign flows into the country. Does the PBOC want to see that or not so much?
We had record flows going through Hong Kong this week into China to buy Chinese securities. On the one hand, China is actively seeking foreign capital, Lisa. They are opening up their financial markets. That's been a big part of their policy push in recent years. There does come a point, though, where they are worried it might be financially, or it might trigger financial instability. They have warned about bubbles in recent months. They have said there could be a point whereby there is too much capital flowing in. But I don't think we're there yet. We haven't heard the PBOC pull any levers to slow the flow of capital going into China. They've done some fairly modest jawboning. Right here, right now, they are welcoming of the money that's going in. But you're right, in the bigger picture, too much money flowing in means stronger yuan and may trigger bubbles in China's domestic markets.
I mean, John, it's an acclaimed chart. For those on radio, it's real simple. The history of 2005, where China gives in, and it's an ever stronger yuan for years. And, John, we really need to understand we revisit that 2014 strength with somewhat of a move down to the 6th level.
Yeah, and, Tom, in addition to that, what's key here is that the Chinese authorities have been tolerating it. Enda, they've been tolerating the additional strength. Do you expect that to continue? Are we going to be laser focused on the fix all week, all month for the rest of this year?
I think it will remain a focus, John, but I think the real turning point for that will come when the export story starts to lose steam. China's exports have been going gangbusters, therefore they've been able to tolerate this strong exchange rate. When we reach a point where that manufacturing story starts to ease off, maybe it's global demand cools or the rest of the world catches up, that's when you'll see these exporters start to say, wait a minute, we're suffering here from higher input prices and we're suffering from a strong exchange rate that will put pressure on the people's central bank. And then they may start to allow some steam come out of the yuan. But as I say, we're not there yet. They do seem to be sending this message that they're broadly comfortable where it is. And that seems to be another message tonight about managing expectations.